Hey everybody, happy Monday. Welcome to the Ask an Analyst session. This is Chris Pulver here. It is Monday the 14th. If you're out there typing a wire yes, if you can hear me, I will bring up the setup here and now you should be able to see me. So hey everybody, happy Monday. Nice to see everyone. Bruce, hello. Jerry, hello. Good. Yes. All right. Give me a quick wire yes, and let's get started. I actually just finished my weekly outlook for my personal YouTube channel. That'll be coming up here in a little bit, just getting that process now. So I want to take, 20, 30 minutes, spend some time with everyone today, talk about some big stuff. We do have a tsunami trigger theme today, and that is called maturing debt, something you may have seen us talk about in the last maybe week or so of some webinars in Market Traders Institute. We're talking about maturing debt. I did find a nice little article from Barron's, and by the end of this year, we have around $4.1 trillion of U.S. corporate debt maturing by the end of the year, which is not that far away, a couple weeks, right? Pretty crazy stuff. There is investment grade debt, there is speculative debt, but 4.1 trillion is about 43% of the global debt that's maturing at the end of 2020. This is, if you're interested in learning about the debt cycles, Ray Dalio has a really good, it's called Big Debt Crisis or Crises by Ray Dalio. It's an ebook. It's available on Amazon. It's brought, Ray Dalio's the head at Bridgewater and one of the largest hedge funds in the world. And basically looking at debt cycles through different stages and pointing at what interest rates have been doing in treasuries. We're looking at kind of peeking out in some of these, potential debt crises ahead. So it's something that's probably been, under the surface for a while, as we've had a lot of other stuff to, keep our attention this year, namely, COVID, namely the Fed, namely central banks, our stimulus packages. Now we have the vaccine that's out and being distributed worldwide. Not that everyone's going to have a fair shake. It's going to different people on there are like logistical concerns. There are supply chain constraints, but we have a vaccine. Pretty amazing process and cycle overall, considering typically a made for use, human vaccine takes 3 to 5 years from start to finish. And we've done it within about 14 to 18 months. So I know that, I'm in the state of Michigan, and Pfizer, their HQ is in Kalamazoo, Michigan. So there was actually a crowd outside of Pfizer today with the giant, negative 100-degree storage units that were taken off in semis going nationwide. So it's a pretty big deal. And anyway, that's interesting stuff. Yeah. So news this week, if you're a Forex trader, news this week is going to be the last full week of trading until we wrap up the year. This week is going to take us through the 18th, and so it's our last uninterrupted week of full-time trading. Going into next week, there will be limited hours for probably both stocks and Forex. And it's probably going to be broker limited hours. Banks will be closed on the 24th and 5th or have partial hours. So make sure you double check with your brokers out there if they have any limited holiday trading hours. But this is an uninterrupted week. Next week on Thursday, Friday, between Christmas Eve and Christmas Day, and the following week, New Year's Eve and New Year's Day. So we're going to see some holiday trading. A couple things I like to point out with holiday trading, and I'll make a note of it right here. Holiday trading 101. Low volume. I expect to see low volume. Doesn't mean necessarily low volatility. It means lower volume. So this might mean we have some drifting with current trends instead of tops and bottoms. Okay, so I want you to think of this as path of least resistance. So this is the reason that I'm also long the euro dollar. I think that right now the dollar index, the path of least resistance, is still, bearish-ish. I know that everyone wants to see a top on the euro dollar, but what you see on the chart right now is this is the euro dollar from the election. This is the euro dollar from the election. We had our November 3rd candle breakout, retest, and go. And that was a retest of around 1760 all the way up towards 2180. I believe the high is around 2170. So, I do think we have levels to get back towards around 2250 and higher. The 2018 highs were around 2500. which is all the way back here into February, March of 2018. So could we run into these levels? Yes, we could. Are we going to drift up to these levels, before we have a top forming? Makes sense. So anywhere between that level of support and this level of resistance, I could see this is where we're looking at some highs and lows to officially form on the euro dollar. Now, this is where I remain long on the euro dollar. We could have a pullback. We could still have a pullback towards 1.20 and then another push into the upside. We could have the path of least resistance and the limited volume markets where it just keeps going a little bit higher and keeps hitting 2250, 2500 until we form a top and fall back down into 2021. So I'm not really a top and bottom caller right now unless my trades are really small or I'm like extremely confident that I've got the right setup. So euro dollar, I remain long. I think that New Zealand dollar and Aussie dollar are also benefiting from a pretty decent run to the upside. Now, again, it's fractionally higher. If I'm looking at something like a momentum oscillator, this is one of my favorite indicators to use when it comes to bigger time frames. I'm just going to go into the momentum oscillator. I use this in my trading room. Momentum oscillator right here, and I'll change the period to a 20 period. Give me a second here. To a 20 period. Okay, 20 period, and pop that up on the chart. Now, what you're noticing is that we have a slightly higher high in price, and there's some pretty noticeable disagreement, right? And this is on a daily chart, so this isn't just some like 1 hour chart. I mean, we know that the dollar has been hit pretty hard the last couple of months. We know that the New Zealand had some strength. We know the the euros had some strength post election. We know that the Aussie's been pretty strong pretty much all year since we bottomed out back in March, and the Kiwi's been the same way. So I do expect the New Zealand dollar to continue to drift a little bit higher. Same thing, we could drift up into this area here around 71.80 and as high as 7,400. I'm trying to clone that line. We could go as high as 7,400 all the way back to these critical highs that started back in 2016 all the way to 2018, right? So if I'm looking at some really big tops and bottoms to form, I think that the dollar index, if you go to these higher time frames, the dollar index still has a little bit more in the tank to the downside. And I think to me, it makes sense during holiday trading that we're not going to see the tops and bottoms that I think some traders want to see on the dollar. So just be prepared, right? Like right now, the dollar is, clawing back. Right now, you can see that the dollar's making lower lows and it's starting to disagree. But look, the dollar isn't really putting in a bottom until we at least break this trend line, right? I mean, if we're going to start pricing in some lows and anticipating some bottoms to form, you can anticipate all you want. But I keep telling traders this, if you are anticipating, it is a lot different than confirming. So if I was going to call the bottom on the dollar, I would feel a lot more confident in my ability to see that bottom hold once we start to break this trend line. Yes? So this is dollar index, right? Now I know that the dollar's not just getting absolutely crushed right now, but it's been a pretty decent trend since post-election. So we get into this, November indecision. That was our November 3rd indecision candle right here. And we've been pushing steadily lower. In fact, this chart, the US dollar index, looks almost the exact opposite of the euro dollar, right? So if you take your election candle and bracket that, this election candle, which is right here, look at how we broke out. There's the low, and there's the high. And then flip this over to the euro dollar, you'll see the election candle, and we broke to the upside, right? There's your election candle, break to the upside. Here's your dollar index, break to the downside. Okay, so for me to say that the dollar is going to form bottoms, I see divergence, all right? Are we going to push into oversold territory? We'll find out more this week. What I'm looking for is how do we trade price action on the right-hand side of the trend line? Okay, typically what I'm looking for is, are we going to see price continue to drift lower, 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 lower for the holidays? Maybe. Are we going to see a flash crash on dollar pairs through the holidays? Maybe. I don't know. I don't think I've ever. Has anybody seen a flash crash on the dollar? I can recall like super high volatility in 2000 and I think it was 2013, 14. Bernanke had some pretty big moves. Actually, no, it would have been earlier than that. 2011 and 12, Bernanke. 2014 would have been Yellen. So anyway, I don't think I've really seen any major flash crashes on dollar crosses versus what we've seen the yen, the Swiss, the Aussie. We've seen some pretty big flash crashes out of them. Pound pairs have had flash crashes as well. Since 2016, we've seen a few on the pound crosses. So again, it's something I'm watching really carefully. I'm very picky on what I'm calling for highs and lows right now. I am long on euro dollar, but I'm also long on dollar Swiss. So that's obviously not going to, they're not going to both work out. Like if I stay long euro dollar, I'm hoping that euro dollar continues to drift up towards 2250, 2300 and higher. My dollar Swiss, I'm really just looking to stay with, and I'm keeping my trade sizes really, really small on dollar Swiss. Okay, again, we've broken down here. We're seeing some indecision. Are we getting some oversold territories? We're close. Okay, we're not quite there yet, but we're close. Okay, if we look left on the dollar Swiss, I'm talking about some major levels back into 2015. There is the Swiss National Bank flash crash level. That's a pocket right in there. And then we have our, close lows and our flash crash levels. If I was going to, intelligently call a bottom on the dollar Swiss, I would have to give myself some room, right? I'd have to give myself kind of this entire area and say I believe that a low can form on the dollar in this area. Now, this is around a 400 pip area. Okay, so am I pretty confident in my ability to call a bottom within 400 pips? Usually, yes, especially on a higher time frame. Okay, and we'll just take a couple of trend lines here. Just stay patient on this overall structure. There's a nice outer trend line on the dollar Swiss, and we can get a little bit more aggressive with an inner trend line right there. So before I just start calling bottoms, which are based kind of these big price action levels and pockets, if we start noticing that there's some play on the right side of the trend line, then sure, I believe that on the right side of this trend line that the dollar recovers and the Swiss weakens. We've got a pocket right here. We have pockets right here. We have range levels all the way back up towards 1.03. It's a long road to recovery, but my first real order of business will be on the right side of this trend line. Can we get back to this trend line? Can we get back to this high in this pocket? Probably. So if right now, if I have traders in, how many of you are actually in? Denise says, please no. If I have any of you that are in some trades on the dollar that are calling tops and bottoms that are short against or actually, I guess, long the dollar and short of the currency pairs, all I'm saying is that I'm hoping you're doing it with small trade sizes. I'm hoping you're doing it with some time and patience on the horizon, because I do think that right now, our last full week of trading, path of least resistance means we might push the dollar a little bit further. Okay. It will be interesting. We have the Electoral College final today. Right now, I believe it's expected to show. Let me find what the tallies were. I just talked about this in my weekly outlook. I believe the tally is we're supposed to see Electoral College votes finalized today. Biden with 306 and Trump with 232. Again, there's people contesting it. I know that Electoral College still plans on meeting despite there being some pretty threatening headlines. In fact, this is a headline on MarketWatch.com. Electoral College meets amid threats of violence and pro-Trump protests. So it's not going away. Okay. Jamie says, we have been waiting for dollar weakness for quite some time. True. Salmon, yep, I'll do Swiss yen. That's one of my favorite trades for this week. So, yes. So anyway, if I'm looking at tops and bottoms on the dollar Swiss, it looks a lot like the dollar index, and euro dollar is the mirror image of that. So if I'm calling a bottom, watch this price action. Okay, we could certainly bounce decently off of 88.50, which was a nice 2015 pocket, and we can retrace back into, let's say, 9100. We can retrace back to 91. We could break all the way back up here towards 92. I really love this pocket around 93.50. We could have some play on the right side of this trend line. I'll be watching this. I'm long dollar Swiss. I have a vested interest in this currency pair actually forming some bullish price action. Right? But given the structure of this larger swing, that's why I think that, right now, if it's going to keep drifting, I don't know what this does. I can't predict the future perfectly, but I would say that price gets a lot better for me on the right side of the trend line. So I know that I'll be looking to add more on the right side of the trend line and play this area to recover back into 92 and 9300. or to the outer trend line. If we're really going to see a massive run all the way back to 100 plus or 1.00 on the Swiss yen or the dollar Swiss, then obviously we need to break this trend line. So unless we see some really aggressive price action forming like right away, this might be holiday drifting to the downside. Just be ready. Okay. Now we could have the market scare us towards the end of the year. That'll be the next thing I'm watching. We'll talk about this a lot in my flex room this week. I'm sure Gary and Tyson will highlight it as well. If you're watching the major indices, watching the S&P 500, watching the Dow Jones, watching the Nasdaq, the SPY, which follows the S&P 500, we are making marginally higher highs, right? We have our, September swing. We broke above that post-election. We are having like a heck of a time breaking higher, right? So here is the SPY. Are we just like beyond bullish? Not really. I mean, all I see on these higher time frames, take a look at this. I mean, this technical pattern is like scary, amazing. But it's also, I mean, will we actually see this pattern? This is a broadening formation. Will this actually materialize? Right? I mean, there was a lesser version of this last year going into the high of 2019. It looked like this. So let's zoom out a little bit. Okay, I was looking at a broadening formation in 2019. It looked like this. Okay, and what did we see? We see that price for the end of the year decided to rally, through that broadening formation and then crash going into 2020. This is, I'll just delete this now. We have the same thing with structure highs. So with the indecision we had back in September, this market's ability kind of price in a lot of things, like a lot of optimism was priced in right around the election week. Okay, and what was priced in? We priced in basically a COVID vaccine. We priced in decent earnings. We priced in a probably a round 2 stimulus package that's on the choppy block maybe this week. The U.S. Congress extended their little deadline by a week. We averted a shutdown. We extended by a week. They're still going to have to figure out whether or not we have a spending bill passed to keep the government open, whether or not we have a defense bill that's approved by all, and if we're going to build in a compromised COVID plan or a COVID stimulus package round 2. So I think a lot of the optimism was priced in. Doesn't mean that I'm bearish on this necessarily, but it means that I think the bulls are going to have a hard time really, really carving out these highs. And if they do, more power to them. I'd say one thing. I was reading some interesting articles this weekend. One group of traders in particular that were getting crushed this year were short sellers. If traders were short Tesla, killed all year. If traders were short the stock market, killed all year outside of this drop, obviously back in March. If you're in the flex room with me, we shorted the stock market. We were long volatility. We traded inverse ETFs. We made a lot of money back in March. We also, basically anything you had the courage to buy in March or April paid out. I mean, like triple digit gains. Insane. I said this last week with Tyson and Gary. It's like I have not seen this many 100+% gains in stocks as long as I can remember, because it's like everything had these crazy V bottoms or double bottoms, or they fell off a cliff and then just rallied up to the moon. So it's a wild year. It's a wild year. But that means that we still have to be traders moving forward. All right. So I'm kind of tiptoeing on this uncertainty right now. I'm not expecting anything chaotic to happen by the end of the year. Unless there's like a big turd sandwich that gets delivered to the stock markets. I think that risk appetite's still going to be steady. What we might see is maybe some profit taking. Profit taking could dip the markets a little bit. If there's any big shakeup into January with, the Senate race is heating up in the U.S. I know it's like there's so much money getting thrown at both campaigns for Republicans and Democrats right now. The Electoral College can spur a little bit to kind of be happening in the background. So there's a lot of fundamental garbage going on that we have to be aware of. But like I said, this is still a holiday time, holiday trading. So path of least resistance is still bullish, and everyone might be like, it doesn't make any sense. Tyson last week said we're in this euphoric stage, in euphoric cycle, which we are. But euphoria can also be that irrational exuberance, can also be the market can stay, irrational longer than we can stay solvent. So I'm not a short seller yet. I don't have any evidence to really be aggressively bearish in the stock market. Okay, the one thing I am trading, and I've been really vocal about this, I've been trading the ETFs on volatility. So I'm long the VIXI, and I'm going to stay long the VIXI. which is currently trading around $15, and my break even is around 17. So if I see this VIXY jump up towards 20 plus, then awesome. If I see this VIXY actually start to break some structure right here, even better. I mean, do I think this will settle back into some of these lows? Maybe. But if it settles back in and we have a higher low and it breaks this structure here, we could be in for a little swing towards, the high 20s, maybe $30 plus. And a break even at 17, if I get to $30, I will definitely take some good profits on being long volatility. Any type of uncertainty means higher volatility. Any type of fear in the markets means higher volatility. And I think that right now, I mean, I've read a lot on this. Like, I think that the naming parameters, like the VIX, is labeled as the fear gauge, or the volatility index is the fear gauge. I mean, I don't think that they don't, like, markets don't really want that to be the semantics. They don't want it to be the fear gauge. Like, look, we could have a correction. We could have a correction in the market, and the VIX will probably go up because of it. Doesn't mean there's fear necessarily. In fact, I'm actually really wondering if we will see a stock market slide. And I think this was actually, it was the DIA. It was the DIA I did earlier in my weekly outlook. Let me find the DIA. All right, let me slide down here. DIA, there it is. So this is the ETF that follows the Dow Jones. And from our September structure, we have our September high to low right here. So we have our high, we have our low, we have this thing just barely hanging on to these 30 plus thousand gains on the Dow Jones. Look, we could have this market right here drop. Okay, we could drop on the Dow Jones all the way down to these September lows right here. Okay, that's a 12.3% correction. Now I say correction because it doesn't mean we're in a bear market, right? Technically, a bear market has to be a 20 plus percent decline in order for it to cross over into bearish territory. Now, what's going to be very interesting is, will we actually see, this level play out with a lot of indecision? Okay, and I think that if we carve out these irrational higher highs, then eventually that will come back in balance. If we stay very sideways right now, then we have to watch this and plan for this type of uncertainty. Okay, now if we break back down into this election range, we can have that 12% correction right in there. Okay, when the last time we really did this, this could be a very similar setup to like 2015. We had several lows back in 2015 that what it really created is it created opportunities to buy the dip. Okay, so we might go, and this is why it's so important that, look, everybody this year that had the courage to buy stocks should have made money. Okay, Forex has been a much more difficult market. I mean, surprisingly, volatility was pretty low most of the year. We had about a 2 to 3 week window this year that was high volatility in Forex. For the most part, volatility in Forex was pretty quiet. Last week was amazing on the pound pairs. So far, it seems like the pound pairs are really starting to show up and start to trade with higher daily trading ranges, which is fantastic. But for the most part, Forex volatility has been medium to low all year, with the exception of a couple of weeks. So it's been a trader's market in Forex. It's been a, throw money at the wall in stocks and get paid on it. And I think that moving forward, we're going to have to be traders again. I mean, everyone that thinks they got this stock stuff figured out is going to be disappointed when the market doesn't keep making higher highs and higher highs and higher highs, right? What happens when the market goes into a sideways channel for the next 12 to 24 months? Okay. Traders either figure out how to have the patience to sit through this, or traders have to find the structure to buy and take profit and buy and take profit, right? That's what I'm saying. So this goes back, like I said, to 2015, 2016, right here. Look at this. Look at all the structure. Look at all this indecision we have from these lows. We have a low, we have a low, we have a low, we have a low. We had marginally higher highs. We went dead sideways for almost 2 years before we finally made the break and off we go. Okay, now volatility is obviously stretched into these kind of new stratospheres, which makes this, kind of new broadening formation all the trickier, because we're sitting at these crazy highs and yet short sellers are getting crushed right now. But I do think that looking at some, selling some calls or buying some puts is pretty interesting. It's expensive. I looked at this last week, actually. I'll talk about this more in my flex room. I looked at buying some puts on the SPY. I just don't want to be. I was actually looking at buying leap puts. If anybody's familiar with options, a leap put or a leap call, basically looking at like 1 to 2 years out, like long-term horizons. It's really expensive to do that, but I think that within those longer-term horizons, I think that timing-wise, like I can have that option actually gain in some price. So I haven't done it yet. I'm just kind of considering it. It's just percolating right now. Okay, so anyway, I spent a lot of time on stocks and indices. What I would like to do is talk about my kind of favorite setups of this week. Honestly, my favorite Forex setup this week is the Swiss yen. Currently trading at 117.36. Actually, I sold this last week in my flex room at 117.50. Take a look at this one. So on the higher time frame, here's Swiss yen, and feel free if you like this one or somebody's dropping some requests on some other currency pairs. I really just like the fact that we have a lot of resistance. Okay, if you can see me drawn on the chart, we have resistance here, we have resistance here, we have resistance here, we have resistance here that was just shy of that level. So I am wondering, are we just coming right back up to hit, 118 and then start to drop back down? Very possible. Okay, are we going to go up just through this level and then drop back down? Very possible. Okay, but I think this is one of my favorite looking setups. There's also a really nice harmonic pattern that is bearish on the Swiss yen. And the last week, this was the 30th of November and the 1st of December. This area to me has created a really nice inefficiency and a really nice pocket. And so even if this does nothing else other than find resistance, if it finds equal highs right here, if it finds equal highs right there, if it goes up into that previous resistance level, I'm starting to look for chances to sell. Okay, so I'm looking for opportunities to sell the Swiss yen at 117.50, 11800, 118.50. I'm looking for some bearish price action. I'm looking for some rejection candles. I'm looking for some evening stars, some dark clouds, some bearish engulfing candles. If we have that, I think the Swiss yen falls pretty simply back down towards this yellow box around 115, possibly back down to range lows at 114. Do I think it can fall lower than that? Yes, I do. But I'm starting to build some small positions near these highs. Okay. And if I get those positions to be in profit towards 115 or lower, I'm going to start protecting some profits into 11400. Okay. So we do have some really good setups on the Swiss yen. I'm watching this one carefully. This is one of my favorite technical trades this year, or this week, I should say. And then I'm trying to think what else do I have. This was one of my favorites. I'm also still watching the Aussie New Zealand to see where this one goes. We're at 106.42. Okay, 106.42. This is going to be a really, really critical week on the Aussie New Zealand. If this one continues to drift higher, I'm going to take profit between 107.50 and 108.50 as a buyer. Okay, I still have a 107 and a 104.50 entry that are still running. I took profit on a 106 and a 105 entry last week. Okay, so I have a 107 and I have a 104.50. Those were two small trades, and I'm looking to get back to 107.50 and 108.25. That's my profit window right there. So if this continues to go bullish, I'm going to protect my profit in that trading window. If it goes bearish, I'm just waiting to reload. Okay, so I'm going to keep the 106 level. I'm going to keep the 104.50. I'm going to buy it again at 105. I'm going to buy it again at 104. I'm going to buy it again at 103 and 102. I'm going to level myself in. Longer term, this to me is a swing. Low to high, there's your crown. We're forming a left tip over here, center tip right here, and we're looking to build somewhere in this area. I'm looking to build the right tip. Okay, so even if this currency pair comes up here and sets up a higher low, we can take the swing and see if this thing wants to start pushing, right? Can everybody see this? If this was an A, B, C, if we start getting some better confirmation that we're forming a higher low and this is going to be a C, I'm long-term bullish on the Aussie New Zealand towards 113 and 114. Okay, so this one is going to be really important. If you're long with me on this pair, if we get to 107.50 or higher, make sure you protect. So let me go ahead and label this on the chart. You can take some notes. So if bullish, protect profits at 107.50 and higher. Okay, and really there's a 108.25 pocket that I was eyeing the whole time. Okay, so if bearish, I'm not shorting right now, just so you know, I'm not selling the Aussie New Zealand. So if bearish, wait for 105, 104, 103, 102 levels to start finding lows to buy and build small. Profit target at my house is freezing right now, so my hands are pretty cold. 107.50 to 108.25 pocket area. So profit target's there, and long term, long term is relative, but I'll say long term, 113 to 114 range highs. Okay, so so not that I don't mean direction here, like if bullish, if bearish. I mean that if price. So if price is, okay, bearish this week, and I'll change this one up here. If price is bullish this week. Does that make sense? So if we see price remain bullish this week, we're going to get to 107.50 and 108.100, and I'm going to take some profit. And I'm going to look to get back in at better prices. If I can, I'm still long-term looking to target 113, 114. If price stalls where it is right now at 106.50 and starts to work its way back down, part of me is hoping that we have a, move here, move here, move here, and we start looking at building something lower to take this thing much higher. Okay. So, like I said, tune into the Flex Room this week. We'll talk more about this one, but I really like this setup overall. The next one before we go is just to keep it really, really simple and look to see what type of day-to-day volatility we have on pound crosses. Okay, I posted a video last week on my my YouTube channel. I called it Currency Strength and Simple Breakout. And look, it's just my personal modified version of the London Breakout strategy. Volatility has been really decent. Look at today's volatility on the pound crosses. Okay, look at last week Friday's volatility on the pound crosses. Look at, if I show you this chart right here, take a look. This was the currency strength from last week. That was a currency strength from last week. That was currency strength from last week. There were so many amazing trading days. Like this was 6 days in a row, including today. We had 6 days in a row where the London breakout, my version of it, played out really nicely and offered some really good profit opportunities. Okay, so I know traders that have been trading the pound pairs this week or last week, and again, we nailed it. Like we just said, look, the pound pairs with this ongoing trade talks, negotiations between the UK and the European Union, it's creating a lot of decent intraday volatility right around that London Open. So here is the strategy. Okay, if we look at the 2 o'clock candle, it's right there. And I talked about this all last week, traded this 3 days last week. I didn't trade it all 5, but it paid out all 5 days with some pretty straightforward price action for those of you that were trading it. I got a lot of nice emails, hey, Chris, that strategy is really straightforward. Made some pips on it last week. So I appreciate those comments. Feel free to share that stuff with us in your trading rooms. Share it with your fellow students and, let traders know what's working for you. So this is the 2 a.m. to 3 a.m. Eastern time candle. That is the equivalent right now of the 7 a.m. to 8 a.m. London candle. So it's right before the London Open. Okay, but that 2 to 3 a.m., there's my high to low that I'm interested in seeing where price breaks out above or below. And then the 5-minute chart is going to be my price action. And it just so happens, and I know that traders probably saw this last night, there was a price gap on certain brokers. And so coming into the London session, you're like, well, I think I'm going to short it because it's got to fill that gap. No, it doesn't. Okay, it's probably going to fill the gap, but it actually broke out here and went 50 pips to the upside before it came back inside the 1 hour range. So I don't have to be directionally biased here. I just have to trade what's available. If I took a breakout trade, it's breaking out above the 1 hour high. This is a 5-minute chart. I buy it, I put my stop loss below a recent low, and it goes up 50 pips. Move your stop loss, trap your profits, be done with it. Pound Aussie, pound CAD, pound Swiss, pound yen, pound New Zealand, like they all did the same thing. They all did the same thing. They all made really good breakouts around that 3 a.m. push. Right? David says, why is your house cold? Well, because I'm cheap. I turn the fireplace on at night. and my dog sits on my lap most of the day, so I'm enough. I just got my phalanges are a little bit cold. Anyway, makes sense. Like it's a really good strategy. Now, I said this in my YouTube video for that breakout. What you need to see is good day-to-day volatility. We're getting it. We've been getting it last week. We're getting it right now. I would say that we have one more full week of uninterrupted trading. So I'm going to keep looking for some opportunities to trade the pound crosses this week for higher volatility. I'm going to go into this website and go to my 1 week average, and I'm going to show you what the 1 week averages have been for the daily trading ranges on the pound crosses. Okay, the pound Aussie over the last 5 full trading days is averaging 200 pips a day from high to low. The pound CAD's 188, the pound Swiss 116, the pound yen 134, the pound New Zealand 217, the pound dollar 150. So if you're looking at those numbers, it's pretty interesting. Like, yeah, let's look at trading the pound Aussie. Let's look at trading the pound CAD. Let's even consider trading the pound New Zealand. Okay, right there, like those top 3, that's a lot of movement that are coming in and around the London session. You can still trade the pound dollar straightforward. It's going to move in the basket or the direction of the pound basket, and your pound Swiss and pound yen. Now those are on the lower side of pound movements, but they're on the higher side of pretty much every major right now. So the pound pair, I love it when it does this. It's kind of on its own island, has its own volatility, and it's higher than everything else. And so for some short-term trading opportunities, the pound pairs and that modified London breakout are super simple to follow. Okay? And as long as these trade talks are still going and there's not, a defined Brexit or a hard Brexit or soft Brexit, like, I don't care if it's good or bad for the pound right now. I mean, as a trader, I don't care. What I do care about is that if we look at the currency strength chart and follow these day to day, that the pound is making some really nice moves around 3 a.m. As long as we get some nice moves around 3 a.m., that means for us as traders, we can find some opportunities. Good? Okay. Yeah, so Eric says, I love the version of London Breakout. Yep, check it out. You can find that it's got a blue thumbnail on it. I have a video series called Keep It Seriously Simple, and you can check that out on my channel. If anybody's interested, you can share the links in my Flex room this week. Any other questions for me today? I know we have a lot of stuff to consider this week. Trade talks are still going on between the UK and the European Union. COVID vaccines are out and about and starting to be distributed worldwide. The U.S. they're starting to hit CVS and Walgreens this week. Regardless of the supply chain constraints and concerns, the vaccine's getting rolled out. Again, I'm not making an opinion on it for better or worse. Do you get the vaccine? Do you not get the vaccine? Not my issue. I'm talking about right now. This has been stuff that's been priced in by the markets back in November. U.S. government shutdown's been kicked by a week. We had a deadline of last Friday, and that was extended to this Friday. So will the U.S. government, will Congress be able to avoid a shutdown again on Friday, and will they bring in the compromised COVID plan for round 2? That's going to be something to the tune of like $900 billion. What's going to be interesting is how do they allocate that state and local government healthcare budget to kind of help out those in need. I mean, COVID cases continue to rise. Shutdowns and restrictions and curfews are going into effect in the U.S., and they've been really strict over in Europe and strict elsewhere in the world. So, I mean, it's not going away. So a vaccine is here, but until it's accessible to everybody, it's not going away. IPOs, I mentioned some stuff on my YouTube channel today. IPOs, we had DoorDash and Airbnb. They were completely mispriced. I don't know if you did any research on the expectations, but Airbnb was expected to open around like 95 a share. It opened at 160. So we've had like this just giant like open super high, and it pumped up for a couple of days like Wednesday through Friday last week, and then it's back down to where it started. We're probably going to see some really bearish movement. I would imagine Airbnb's like probably going to settle in at like $100. I mean, does Airbnb have profit? Not really. Do they have a model that is sustainable and means a lot? Sure. DoorDash, do they have to focus on food? They're going to have to do more than food. But both, like, those were big IPOs last week. They went public. They went crazy up for a couple, like 24 to 48 hours, and then they're crashing down today. So, lots to discuss this week. Electoral college finalized today. See what that means. Good or bad. Trump, no Trump, Trump, Biden. IPO pricing, where the market's going to be for the end of the year. Lots of stuff to take in. Look, all that news, all that fundamental noise, just you digest it, right? Be aware of it. But if anything, all it's doing for me is like it's going to force me to take more profit. If I have good positions running, it's going to force me to eliminate risk and protect profit for the end of the year. Hopefully, we see some trends that continue to run through the holidays. Or if you're waiting for those tops and bottoms, be on the lookout for the evidence for those tops and bottoms to stick. Highs and lows, tops and bottoms do form in December and January. I'm watching the stock market. I'm watching risk on, risk off, just like we always do. Okay, so we have to consider that. We do have a Fed rate decision this week as well on Wednesday. It's probably going to be more of the same. The Fed might be doing some more trickery with some security purchases, maybe some mortgage-backed security purchases, maybe some treasury purchases. I think that, again, like if the U.S. is going to be like, hey, man, we are super, super dovish, then that kind of leads us into that dollar getting maybe softer through the rest of the year. We could just see a lot of this continuing on through the week. I don't think the Fed's going to do a lot to disrupt the flow of things right now. I don't think they want to have any type of market scare on their radar. They don't want to be responsible for it. So I think the Fed's going to be very calculated and vanilla this week. But we do have a high impact week. We have news out of the Eurozone on Wednesday, FOMC on Wednesday, GDP for the New Zealand on Wednesday, employment news for the Aussie on Wednesday, Swiss National Bank rate decision, which I know is going to be the same rate most likely, but a press conference. And at some point, I wonder if the Swiss National Bank and Switzerland in general will acknowledge that their currency pair is really, really strong. We also have a pound rate decision on Thursday. So for our last full week of trading without holidays, we have a busy week. So this doesn't mean like, oh, what do I do? Do nothing and just wait for all the news? No, it means that this is going to show us there should be good, ample volatility for us to trade. Okay, that's it. All right, I know I would just talk a mile a minute, but we have a lot of stuff to digest this week. Make sure you join Tyson, Gary, myself, all of our other analysts in our rooms, Analysts on Demand, our trading rooms. Take a look at our webinars this week. Like, we've got a lot of stuff to talk about as we rein in the rest of the year. Let's make sure we finish strong and finish on a high note, because as of December 31st, which is a Thursday, and January 1st of 2021, which is a Friday, it is a clean slate, and we start all over again, right? So it doesn't matter what you did this year. You can always be better, and I've had a good year. I'm sure many of you have had great years, steady years. If you are, if you're just getting started, it's a great time to be learning. If you've been around and it's been a good year, enjoy it, celebrate it, get ready to do all over again. We've still got a lot of trading ahead of us. And as always, just it's one trade at a time, and we keep grinding. Okay. All right. I'll see everybody this week in my flex room. Tyson, Gary, everyone else in their trading rooms. Have a great week, everybody. Thanks for being with us on Ask an Analyst, and have a great week. Talk to you soon. Bye.